Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's August 21st. This is actually going to be my second time to do the chart lesson today, and I almost didn't do one, but for some reason, the first one, um, I did about a 20-minute chart lesson and looked over there, and I guess I forgot to hit record or something fouled up or something, but I didn't record not one word or one thought, so it was all for naught. So I'm doing it over again. So I'm probably, if it feels a little rushed, um, it's probably because I'm not going to go into as much details, and I apologize, but it just was one of them days. Um, but I want to back out of this and show you the bigger picture first, because if you're just in there close, you don't really see this. And I started with this line here. Um, I actually drew it off these two lines first and drug it up, and so I was trying to find a place where it fit, and it tends to fit the best right there. Actually, it did it did fit best there earlier, but later I moved it to here, and you can see that's a great fit. It holds prices really well. And I told somebody that earlier, and I've told people that quite a bit lately. People are always asking about the trend lines. You know, I may start out with a trend line, like right here. I might have started with it like this, and then maybe I end up adjusting it. But what you want to see is you want to see it fit prices real tightly or real neatly on both sides. And notice how what happens each time prices touch this line until here it broke through. But right here, every time it touched that line, it turns it down. So that's a good sign that you've got it right. And the more touches, the more confirmation that you got it right. And so don't be afraid to relook at your lines. If you originally drew your trend line like, let's just say like so, well, guess what? It's not touching that line anymore. And if you bring it down, it might even fit right across there to some degree. But notice you don't get that many touches. You got those first two, and then it's getting through, and you got these first couple, but it's getting through. So you end up adjusting it a little bit, and next thing you know, you've got it across there, and it's looking pretty good. You drag it up, and oh, look at there, it fits perfect. So just keep moving it around until it fits and holds prices neatly on both sides. If it's not holding prices neatly on both sides, then it's suspect. So there's nothing wrong. And you can see even the trend line rule still held on this channel, working down. We had the break. It was a big break, so it was kind of odd. But look what's happened. We're trying to make a retest. There's about 10 minutes left in the trading day, and my guess is we'll have a new low before this day is over. And but again, look at the difference if you're looking at this like, up in here closely, without those lines on there, you can't even tell. It's really kind of a downward bias trend, even though it's not very strong. But if you back out, it's pretty obvious we're working lower. We're making lower highs across here, and we're making lower lows down through here. And it really wasn't obvious until we turned lower here and then bounced here. Then you know you got a channel here, and you got to pay attention to it. You can suspect it here, here, but until you get a third touch each time, now you got it. This sets it up and this verifies it. These two set it up and this verifies it. And you can see it bounced again here before it actually went lower. And that's because so many people saw this and they were trading this as, they're traded. And normally you wouldn't want to buy these low sides on a channel. But the difference today is, and I want to make sure you understand this, is look at the EMA. Look how prices are consistently on both sides of the EMA all day until we really got below it here for a little while, and then we got above it here for a good bit, and then we've been below it ever since. So these are good trends in both directions. But this, even though we got a downward bias, it's still a trading range type day because prices are constantly on both sides of the EMA, and it makes it harder to trade if you are not paying attention and you're not aware of what's happening. So keep that in mind. And that's the only reason we've got buys mixed in here. I really bought more today than I sold. But let's talk about the trades, and I'm going to wrap this thing up. Like I said, this is my second trip through But we started off, I was looking at this little down channel here, and if you copy that and put it over there, you can see it fits perfectly on this side as well. So you got a little down channel working. We broke it, we moved to a new low, we made a double bottom with a 1 tick new low. So I like that for a long. That was right at just right after the open. I didn't really like anything in here. You can't go long out of this. You got to wait on it to fail out one side or the other, and the obvious thing is, hey, they're probably going to trap people to the low side because everybody's looking at it moving down, and guess what? It goes straight back up to the other side. And then you got a little channel, a little trend line working up here now, and but we hadn't had a break of it, and I didn't like going long out of this. This is just a little two-legged correction, but I didn't like this setup, and by the time it gets up here, you don't really have room to scalp out, and you're way away from the EMA. I just didn't like it because of all. Notice this: 1, 2, 3, 4, 5 bars overlapping. 1, 2, 3 of them are dojis. This was the real tricky one here when it closed like this. It's just not a very good setup. It would have worked if you took it. But I didn't like it because the odds are we are going to the other side, but it's too much of a chance that you get trapped right here the long side and then it turns down. And that's what they did. They still come down here and they ran the stops on that little double bottom by 1 tick and took it right back up there for a retest. Again, I didn't like going long here because of all the overlap. Remember what I said earlier, your best trades are going to set up here and down here or off of these trend lines. It's the stuff in the middle that will trip you up more than you care to know and cause you to lose money. So unless it's a sure thing or a really good setup, you got to kind of watch those, and you'll see. Look at all the trades there at the highs of the resistance and the lows of the support, and that's the way. That's what you really have to watch for. But anyway, I didn't like going long, and guess what? When it gets right back up here again, and now you've got multiple touches across here that turn, and you've got a few down here, nice short. It's not the prettiest setup. You'd probably want to use a limit order, and it would have worked even 2 ticks back into this bar. You might have gotten shaken out right here, but that's what they want to do. They want to shake people out and get people trapped to the wrong side. And really, you could have gone short even here because they trapped people long, and that's your second entry short, and there's a good chance we're going lower here. So I tell you what I'm going to do. I'll go ahead and put that one in green. But I didn't see any reason to risk that one because we could have easily gone higher and made a measured leg like this up to this side. But that's what they caught people off guard right there. They trapped them and then turned it down. And look, when it broke below that bar high, it took off. It didn't even overlap there. That's because that's a good trap. You got a lot of people trapped long, and they got to exit. And all their stops are down here, and then boom, they just run right through them. And then guess what? It gets down here where the support is, and it bounces again. And this is one of the few times where you like a little doji because it allows you to get in at the lows without having to have a big stop. Even if you entered with a stop on that, you're looking at 1, 2, 3, 4, 5, and 1. So you're looking at 6 or 7 ticks, which is better than 2 points every single time. And if you used a limit order, which would have gotten filled on this thing, you might have got in with a 1, 2, 3, 4, 5 tick stop. And so the closer you can get into the low, the cheaper you are, the less risk you got to take. And it's a quick, easy move back up. And plus you got to make sure you can get out before it gets back to the EMA because there's a good chance, even if it's going to go on through, that it's going to get some resistance there first. And you can see it did right there on that bar, and then it kind of fought through, and then guess what? It comes back down here and it bounces again. Same thing. Drop a limit order in here. Even if you use a stop, it would have worked. Notice you got 2 legs down here. Here's leg 1, which consists of 2 legs, and then there's leg 2. And it's a little more than a measured move, but if you look at the closes, it's a measured move. And then going back up, you got 1 leg, and then perfect measured move on leg 2. And that's the way the market works. But when it bounced right here, again, I like to use an limit order here if you could. And easy move back up. I really thought it was probably coming up here. But when this held, you got, I didn't like going short on the first one. But when it tried to go higher again and turn right down, notice it went above this green bar first. Look at that. It went higher first and then turned out. So I had to stop just waiting there if it broke out the other side. And that's usually the only time I'll do that. Normally I'd wait for this bar to finish. But because it went higher first and broke out lower, that's a good sign that it's going lower. And we're probably coming back down here. And guess what? There it comes. And I drew this one in green simply because even though it's a good setup, it's a failed second entry long, so it is a long trap. But look how close we are to these lows right across there. There's not a lot of room. Usually a trap is good enough, especially if you've noticed this channel, because you got to figure eventually we're going to break through there and get on down here probably. And the fact that we came up short here means we're probably going to, the distance between there, we're going to overshoot that at least. And let's just measure that and show you, because the market moves kind of in measured moves. And so we overshot it about that much. And you come down here and look, it overshoots it by that same amount down here. Or actually, I meant to, that's the wrong place. Let's do that again. Where were we? Well, shoot, I got completely lost now. Well, anyway, I can't find where we were at. Which trade were we talking about? Oh, we were talking about this. We were talking about this trade. Oh, actually this trade. Wow, I'm really got lost here. I don't know how I just had a brain freeze there and I lost completely what I was talking about. I know we were talking about overshooting down here. What was I basing that on? Oh, okay, I'm sorry. For some reason I was thinking trend. We undershot getting back up there by about that much, and if you come down here, we overshot the other side of the range by that much, because the market moves in measured moves. And I'm guessing too that if you look at this measured leg, that this one is going to be the same, and you can see that's a perfect measured move. So just keep that in mind. When you undershoot something, you're probably you're usually going to, if it undershoots down to this side, it's probably going to overshoot up on the other side, and vice versa. So because the market moves in twos and it kind of moves in measured moves. And so that all may have given you enough reason to think that prices would go to here. And because of the trap, you're probably going to get through there. And it did get a perfect move. And then it comes back, a little breakout pullback short. And you've got this trend, and notice nothing's closed outside of it yet. We've got some stems, but that's not good enough. You generally want to close outside of it, a strong close. And so another chance to get short right there. It's a little breakout pullback short. It's off the EMA. It's a two-legged correction. You probably wanted to use a limit order, but if you did, you might have got left behind. Even if you use a stop, there's no problems there. And then you got another chance to enter here, but I didn't like that one. You did want to measure this and figure that, hey, if we broke through, we may go a measured move down here that's equal to this range up here, down here. So that might have put you into that trade, but I was a little hesitant to go short here. I thought it was getting a little too risky, but it did. It went right where you think it did. It bounces off of this support, the measured move, and I liked going long there as long as you got in enough, with enough room to get out before you got to the EMA. And look how you found resistance right there at the EMA. It's just, you're going to do that. It's very rare that prices are going to shoot right through that, and when they do like that, that's not a good sign. And look what happens. Even though they trick these people, it keeps going lower. It's usually prices do not rocket through the EMA unless you're up here, and even then it doesn't really do it very often. So it's telling you something. It's a clue. But this is a second entry long. You got your first move up, a little pullback, and then a second entry long. There's still no break of this thing yet, but it's, you had the measured move down here. You had the trend channel line. You had this measured leg, a little correction, another measured leg. So that's 2 measured legs down with 2 equal legs in it as well. A lot of reasons to like that long. I thought it was worth risking it. It's a trading range type day like we talked about. Nice, easy. Well, I won't say easy. It was a fairly quick trade. Then it pulls back, and then there's a failed second entry short right here, but I didn't like that one because of the 3 overlapping bars and the fact that we were crawling up this trend line here. And I actually had a little lower originally, and that probably even looks better there. And so I was afraid I'd get trapped there, but all it did was correct 2 legs and take off again. So then you got a failed second entry short. I liked it. Again, it bounced off our order up here a couple of times before pulling back and going higher and finally, filling the order. But I was a little bit worried about it, but we hadn't had a break or a close outside. This was the first close outside. And then guess what? You get 2 legs up and you turn down right at that trend line again. And that's why I like this short. It's a little more aggressive because you could have been looking at this like so, and then you really don't have a break yet. But notice what this line right here does. It comes back up and touches it to the tick and then turns down. So you still got a little retest there no matter how you drew that. If you drew it up here a little tighter on the closes, you got a break and 2 legs up. But if you drew it down here off the lows, you still got a break and a retest right back up here in the same place and then turn down. I didn't like going short below that bar, but this is a good example of why you don't sneak in early, because look how bullish when that bar was tapping up here at that high, I guarantee you it suckered in a lot of longs thinking, oh, this thing's fixing to take off, and guess what? It didn't. And you know that's the truth, because that's how they got it to break a little bit lower out of this channel, because they were hanging on thinking, well, I'll just give it a little more room because the line, the trend channel's not very low, and then it'll be heading back up again. And guess what? They run it below that, and they all have to exit. They all start exiting, and then they finally take it right back up. And I just didn't like going long here. And notice on this channel you had a break here, a couple of measured legs, 1 leg, pull back 2 legs, and then it was headed higher. And I just didn't see any way to get in this one that I liked. I thought it was risky because we could have got a measured move down from here. So I just didn't like anything there until we came back and tested this original support here again. And notice there's 1 leg down, a correction, and then a measured leg that has 2 legs in it. And so nice place to consider along. It's a little small bar, a doji. It closes on its high. It broke lower below this little double bottom. It traps people, turns up. You don't know that it's going to take off like that, but guess what? Any runners here, you could have ridden all the way up for 41 to 54, 13 points in just, 30 less than 30 minutes. You can't. That's the kind of moves you want to catch. And guess what? Right here, it was a little bit tricky, but remember we overshot down here. And if you measure that overshoot, here's another one of an equal move, and so there's a chance it could go up here. But here's why I liked it. You got a new low here. Notice you're working lower, so you're counting, and then you got a first entry short, a second entry short, and then boom, it turns up. That's a trap, short trap, and look at it go. So these 2 trades alone could have made you a lot of points on a runner today, and that was really it. There might have been a chance to enter in here, but it's really risky, because as soon as you do, this is what happens to you. And look at this thing. And guess what? We got a perfect retest today there's the previous low. By 1 tick, the retest was good by the close. And that's an interesting, but look at that move, and then look at that move. And these are strong moves, even though there are lots of little bars. Look how far we are away from the EMA, and we can't even get back to it. They got everybody trapped long, and they punished them. But it shows you the rules usually hold. I mean, it didn't look like it was going to hold here because you got this channel coming down, and we got a break, and look, it's way up here, and you're thinking, hey, what happened to the trend line rules? And the next thing you know, it works to the T. 1 tick, and that did it before the close too. So it did a lot of movement in the last 30 minutes of the market on that retest. So pretty interesting day, but the main thing you got to notice today is that high prices are on both sides of that EMA all day long for the most part, except here and here. And these are two good trends. You know, it's obviously trending up and it's obviously trending down. And you don't counter trend trade those kind of trends. And it gets tricky even counter trend trading something like this, because this is a downward bias. But the fact that prices are on both sides of the EMA, that's a tell that hey, the market is kind of ranging today, and it really stopped, I would say, here, because we went right through the EMA, pulled back. Really, I would say this move here is where the trend started, and then that trend just came out of nowhere. So, and this is a good example of how do I redo my lines. Look how I originally had that. We had a break and two legs down, looked like to a new low, but that didn't work. So you go back and redraw them. And now, so I usually adjust mine, you know, as the day wears on, or, you know, as the time wears on. And you can see, and this is probably going to be a median line kind of deal with a measured point on the other side. And you can see that if you bring it right off of that right there. You can see that's what that is. And we seem to see a lot of this lately. You know, used to, you know, generally your channels are real easy to spot. And, you know, but lately we seem to be having different levels of them, usually with what I call a median line. So, as long as it's there, draw them and use it. But anyway, that's it for today. Still lots of entries, and there was more as the afternoon wore on if you were still trading, but I was wore out by that time. So, I mean, it was really slow moving until this started. Then we moved down really hard and then up hard and back down hard again. So these are the kind of days that, you know, these are really easy to trade to me because they're so predictable. And you know, even if you get trapped here, like even if you took this long, there's not a good setup here really, but even if you took this long, if you find yourself trapped, just reverse, because you know it's going to be a trap, or at least just exit with what you get. Don't let it sit there and take a full 2-point stop on a move like that. And you see, and that's what usually happens. You'll see it work a dozen times until you take it, and then that's the one that fails. But that's the thing. You can't, if you take them all, even if you lost this one, that's the only one that failed on you. And you could have made it all back by reversing. So the key is to take them all. If you try to pick and choose, what usually happens is you'll watch the first few because you don't have the nerve to do it, and then you'll finally decide, hey, it's bounced every time, I'm going to take it this time. And guess what? That's the one that fails. So I don't know, the law of trading, whatever you want to call it, if you try to pick and choose, you will pick it wrong every single time. You got to go one way or the other, and, you know, buy it each time it comes down, and then the law of averages will be on your side. And that's what this is all about. You know, we're looking for biases that put them, you know, that put our entry on, you know, that put the odds of our entry on our side. And if you know those biases and you take them all, you're going to make money. But if you know those biases and you only pick and choose and you're too scared to take most of them, and by the time you get up the nerve, you're too late, then guess what? You're going to lose money most of the time. So, you know, find the trades that you're like, that you can spot, that you're comfortable with, and get good at those. Take them all. Sort it out at the end of the day if you're wrong. All right. Don't get excited when you have, you know, if you're a profitable trader, you shouldn't get too excited with a win, because you're expected to win, and you shouldn't get too excited about a loss because, hey, you're going to have losers. We don't win them all. You just got to, the key is making sure when you do win, you get as much out of it as you can, and when you do lose, you don't give it a whole lot. If you're wrong, you're wrong. You know, don't sit there and let it take more than 2 points. And when you can, try to get in as tight as you can and have your stop 1 or 2 ticks below the signal bar, and don't give it any more than that, and you'll be fine. Even if you have some losers, you'll still be fine. It's not that big a deal to make back a point or two loss on a trade, or even a couple of those during the day. But if you're scalping and not catching a lot of runners, and you know, you can have 4 or 5 winners and only one loser if you let it take 6, 5, 3, 4, 5, 6, 7 points on that loser. Then you're never going to make money. The key is to keep when you're wrong, don't argue with it, get out, don't let it take any more, and when you're right, try to milk it for everything you can get out of it. And you're never going to get it all. As long as you can get, as long as you can get a good bit of it or the majority, then you're doing good. But you can't always get it all. Just try to get a good piece of it, and don't give it anything when you're wrong. Give it as little as you can, and that's going to help your trading. But what happens is most people, and it's happened to me, that's how I know this, is because I would have these win streaks, and I'd win 20, 30 trades in a row. And it was detrimental to me because then I couldn't stand to have a loser, so I'd give it a little more room. I'd say, this trade will come back if I give it a little more room. And guess what? I give it a little more room, and it's still against me. And I said, well, I've let it go this far. I might as well give it another couple of points. And next thing you know, you've lost 10, 12, 15, 20 points on a single trade, and you can't recover from that. It takes a long time. So don't let that happen to you. And I know that's what happens because I know that's that's generally what happens in trading, is that, even if you're a pretty good trader, you'll have more wins than losses, but if you're not careful, you'll still lose money because you'll screw up on a single trade or two and let it take way too much money. So if you find yourself hoping and praying that prices come back, that's a sure sign. Close it right then, because you'll probably save yourself some money. And guaranteed, as soon as you do close it, it'll go right back to where you thought. But if you don't close it, it'll never come back. I know, because I know that from experience. I've made those mistakes in the past too. And they're still easy to make if you don't guard yourself very, very closely. It's a battle that you'll never get over. You just have to learn to win it. So I hope that makes sense to you. I'm going to wrap this up. We're almost 30 minutes in, and I've done this twice, so I've got 2 hours wrapped up in this thing probably. But this is Mac with PriceActionTradingSystem.com, and we'll see you tomorrow.